When we look at the CEOs of Groupon, Lehman Brothers, FTX, and Silicon Valley Bank, our impressions of them are closely tied with their leadership styles. Andrew Mason of Groupon came across as very energetic and creative, but he was also immature. His style was largely delegative. He was giving employees freedom, but without enough discipline or control, which kind of contributed to the poor financial oversight. Um, with Richard Flute of Lehman Brothers, he left the impression of being kind of aggressive and stubborn, overly confident. He really embodied a authoritative leadership style, very top down and focused on his own vision, and kind of had an unwillingness to pull back as the risks grew in the company. Sam Bankman-Fried of FTX, he was really charismatic and showed humility on the surface, and really gave the impression of someone who wanted to serve others. But it seemed like in reality, his leadership was a bit reckless. He kind of portrayed a servant leadership on the surface, but in practice, it was more delegative. It kind of had weak oversight and ended up misusing customer funds. Greg Becker of Silicon Valley Bank, he seemed more calm and approachable, very more optimistic in his outlook. His style was more participative, kind of working collaboratively and relying heavily on like trust in the markets, but this kind of left them a little passive and unprepared for the crisis that happened.
The involvement of the CEOs in each of these cases was imperative to the eventual downfall, and I'll be going over each of those CEOs and what their involvement looked like. To start, the Lehman Brothers case CEO Richard Fuld, his involvement, he was aggressively expanding into subprime mortgages with risky real estate investments, as well as maintaining those dangerously level high ratios of that 30-to-1, leaving Lehman very vulnerable to the market shocks, which was seen. He ignored early warning signs of the housing crisis, as well as used Repo 105 accounting to hide the true level of where their debt was actually at. So overall, he was dominant and a top-down leader, so it really wasn't beneficial for their success and ultimately did lead to their demise. Now, in the case for Groupon, the CEO, Andrew Mason, his involvement was more, there was just not great. He didn't oversee the rapid expansion very well, and in the market at the time, it was just rushed, and they overhyped into the IPO in 2011. Overall, he failed to transition the company from deep discounting to scalable long-term business model, and so that's where his involvement kind of led to their demise, and it wasn't as detrimental as we saw in the Lehman case. There wasn't bankruptcy, but it still ultimately didn't end up in a great spot. Now, in the case of FTX, their CEO, Sam Bankman-Fried, really got into a bit of a mess. He used the FTX customer funds to cover losses that was from risky behavior made by his trading firm, as well as didn't really have any control or governance within the company, gave misleading information to investors and the public, as well as oversaw the culture of recklessness, personal loans to executives, just a big mess. And he's actually currently awaiting sentencing, potentially serving time for his involvement in the demise of the company. Now, in the case of the Silicon Valley Bank, the CEO, Greg Becker, primarily failed to see the risk of the interest rate from the treasury bonds, the long-term bonds that were used, and as rates sharply drove down in 2022, 2023, there just wasn't much happening, poor communication, a little bit of panic, and there was like last-minute attempts of trying to get back and gain some control, but at the end of the day, there was lack of confidence and nothing could really be done. Overall, we see with all of these CEOs, they all have parts that they take into account of with damaging some sort of aspect of the business. While it wasn't entirely on them seeing the downfall of a lot of these companies, it definitely did not help their situations, and it could have been handled in a better manner.
Hello, my name is Kat, and today I will be doing the personalities of our different CEOs. Firstly, we have Groupon's Andrew Mason. He was seen to be quirky, creative, and eccentric. He had a leadership style that was different from any other tech CEO, and this was due to him being humble-natured, as well as his communication style, which was seen as much more relatable and down to earth. He was also very honest in terms of his lack of experience in being a CEO, which showed him to be very self-aware. Now we have the Lehman brothers. Richard Fuld is the CEO of that company, or should I say the company that used to be. Richard Fuld, he was analytical, he was known to be a risk taker, and he was driven by ego and stubborn. He often relied on risky real estate-backed securities to run Lehman Brothers, and he was also defensive in terms of his actions towards the downfall of the company. He may have not taken advice and warnings that were given to him before bankruptcy, which would have saved him if he would have taken this advice. He also avoided risk reductions, which could have prevented the bankruptcy of Lehman Brothers. Now we have Sam Bankman-Fried of FTX. He was reflective, transparent, idealistic, and comfortable with risk. He would often be very specific about different aspects regarding leverage and asset crashes. And also the way he would think was often mirrored by cause and effect scenarios, which showed him to be very transparent. He would often focus on the bigger picture instead of risk management, which is how he would take these risks. He has been open with the mistakes he had made and is aware that he did not do a good job managing the operations of FTX. He also admits to committing fraud, even though he claims that it was not his intention. Lastly, we have Greg Becker of Silicon Valley Bank. He was seen to act defensively and was often reluctant to take accountability for the downfall of Silicon Valley Bank. He was detached from ethical consequences, and he was traditional in terms of structure. He was also mostly blind to risk. He minimized his blame for the collapse of SVB and shifts it to the whole operations team as a whole instead. He was emotionally detached in terms of the collapse and treated the situation in a mechanical way without empathy to those who were affected. He had repeated failures in risk management and hedging, yet he believed that these were necessary for returns. In other words, he prioritized short-term gain over long-term health of the company. All right, thank you for listening.
Hi, my name is Kyle Matheson, and when looking at these four CEOs, I looked at if they took responsibility for their actions and held themselves accountable. When we looked at the CEOs of Groupon, Lehman Brothers, FTX, and Silicon Valley Bank, there was one common thread, and it was how they handled responsibility for the failure. Andrew Mason of Groupon did admit that he made mistakes, but his casual style made it seem like he didn't grasp the seriousness of it. He also accepted some blame, but not in a way that restored any confidence in the company. Richard Fuld at Lehman Brothers took almost no responsibility. He blamed regulators, short sellers, and then just the overall market. He was very defensive in his tone, and then showing little contribution for the collapse that triggered the financial crisis. And then Sam Bankman at FTX repeatedly said he never intended fraud and that he just made mistakes. But he avoided full accountability for the lack of controls, and his explanations often shifted blame to market crashes rather than his own leadership failures. And then Greg Becker at Silicon Valley Bank acknowledged that he is the CEO, but when he was um, pressed, he leaned on unprecedented events. Um, so really just kind of passed that off. He didn't admit that the risk management. He didn't admit that the risk management failures were at the core, and he refused to return bonuses, which made his responsibility seem not authentic and really shallow. Overall, while each leader admitted that they did do something wrong, none fully accepted that it was on them and took accountability for that. Most focus on excuses, outside factors, or minimize their own role, even though they were some of the top people in the company, um, rather than owning the collapse of their firms. So, thank you.
Hello, I'm John, and I'm going to be going over other important issues and other underlying factors that we found in the cases and videos as a group that we felt needed to be discussed. Starting with risk management, I'd like to point out FTX and Silicon Valley Bank didn't even have a single person appointed to oversee customer exposures at these firms, which is a major red flag in this industry and led to their um, downfalls. Also, hedging at Lehman Brothers, this was a major failure where they they overvalue perception rather than risk and leverage themselves using the repo 105 like accounting trick to maintain leverage. And in Silicon Valley Bank's case, they mismatched the assets and liabilities, which completely derailed them and led to increased bonds or destroying their bond portfolio. Next, the impact of bank failures or the ripple effect we as seen in 2008 with Lehman Brothers. I actually don't remember much about this era due to being only like 7, 8 years old, but if a bank fails, it has a major effect on the whole global economy and everyone because it leads to terminations and credit problems, and felt like it was a very important underlying factor in these cases that needed to be pointed out. Lastly, unprofessional and dishonest CEOs, kind of touched on before earlier in the discussion, but felt it needed to be brought up again because in the Groupon case, the CEO was seen to be a little immature, like as in his last statement, he kind of joked around. And in Sam Bankman-Fried's case, he was completely dishonest and led investors down the wrong path and just completely basically scammed people, and felt this was a major factor in these companies' fallouts. Thank you for listening to our discussion.